January 2019. Manhattan, New York. Adam Neumann stands on a stage. Lights flash. Music pounds. He raises a glass of tequila. Behind him, a single word glows: WeWork. The crowd roars. Thousands of employees cheer. They believe they're changing the world. Neumann tells them so. He says it often. He says it with absolute conviction. At this moment, WeWork is valued at $47 billion. That number makes it the most valuable startup in America. More valuable than SpaceX. More valuable than Airbnb. More valuable than Slack, Lyft, and Stripe combined. The company occupies over 600 locations. It spans 32 countries. It leases more office space in Manhattan than any other tenant. More than JP Morgan. More than Google. It is growing faster than almost any company in history. SoftBank has poured over $10 billion into WeWork. Goldman Sachs is involved. JP Morgan is involved. T. Rowe Price is involved. The smartest money in the world has placed enormous bets on this company. Adam Neumann is worth over $4 billion on paper. He surfs. He drinks. He flies on private jets. He buys buildings, then leases them back to his own company. Nobody questions it. Not yet. His wife, Rebecca, runs a private school inside WeWork. It is called WeGrow. Children of employees attend. She describes herself as a spiritual leader. Nobody questions that either. The mission statement says WeWork will elevate the world's consciousness. A real estate company. Elevating consciousness. Investors nod along. But something is wrong. The numbers do not add up. They never did. In 2018, WeWork lost $1.9 billion. Revenue was $1.8 billion. The company spent more than it earned. It spent far more. And the gap was widening every quarter. The leases are long. 20 years, sometimes 30. The memberships are short. Month to month. This is the fundamental problem. WeWork takes on decades of risk. Its customers commit to nothing. But nobody talks about this. Not in 2018. Not in early 2019. The narrative is too strong. The charisma is too powerful. Adam Neumann walks into rooms and people hand him billions. That is not an exaggeration. Then comes August 2019. WeWork files its IPO prospectus. The document is 350 pages long. Investors read it carefully. What they find is shocking. The losses are staggering. The governance is bizarre. Neumann controls the company through special voting shares. He can never be fired. The word community appears over 150 times. The word profit barely appears at all. A new financial metric is invented. They call it community-adjusted EBITDA. It removes almost every real cost. Marketing costs, gone. General expenses, gone. It is creative accounting taken to an absurd extreme. Wall Street reacts. The valuation drops. 47 billion becomes 20 billion. Then 15 billion. Then 8 billion. The descent takes weeks, not months. Adam Neumann is forced out in September 2019. He leaves with a $1.7 billion exit package. Employees get layoffs. Over 2,400 people lose their jobs before the year ends. The company that promised to elevate consciousness cannot pay its cleaning staff. The company valued at $47 billion will eventually file for bankruptcy. Chapter 11. November 2023. From $47 billion to zero. In 4 years. This is not a story about office space. This is a story about belief. About a man who convinced the world he was building a revolution. About investors who wanted to believe him. about a system that rewarded spectacle over substance. This is the story of WeWork. Adam Neumann grew up on a kibbutz in Israel, a communal farm, a place where people shared everything: food, work, purpose. That idea never left him. His childhood was unstable. His parents divorced when he was young. He moved between homes. He moved between countries. By age 7, he had lived in 6 different places. He never quite fit in. But he learned something. He learned how to walk into any room, how to make people listen. He arrived in New York City in 2001. He was 22. He barely spoke English. He enrolled at Baruch College. He studied business. But classrooms bored him. He wanted to build things. His first venture was crawlers, baby clothes with built-in knee pads. It launched in 2006. It failed. His second idea was a collapsible women's shoe. That failed too. Neumann was broke. He was frustrated. But he was paying attention. He noticed something about New York real estate. Small businesses struggled to find affordable office space. Leases were long. Commitments were rigid. Freelancers worked from coffee shops. Startups crammed into apartments. The commercial real estate market was broken. And nobody seemed to care. In 2008, he met Miguel McKelvey. McKelvey was an architect. Tall. Quiet. The opposite of Neumann. McKelvey had also grown up in a commune, a place called Oregon. 5 mothers raised him collectively. He understood shared spaces. He understood community. Together, they spotted an opportunity. Their landlord in Brooklyn had empty floors. Neumann convinced him to let them convert the space. They called it Green Desk. It was an eco-friendly co-working space. It opened in 2008. Right when Lehman Brothers collapsed. Right when the economy fell apart. The timing seemed terrible. It was actually perfect. Thousands of people lost their jobs. Many became freelancers overnight. They needed somewhere to work. Green Desk filled up fast. Within months, it was profitable. But Neumann wanted more. Green Desk was a small business. He wanted a movement. He wanted to change how people worked, how people lived, how people connected. He bought out of Green Desk in 2010. He walked away with a modest profit. Then he launched WeWork. February 2010. The first location opened in Soho, Manhattan. 154 Grand Street. It had exposed brick walls, glass partitions, a rooftop terrace, free beer on tap. It looked nothing like a traditional office. That was the point. Neumann had a pitch. He practiced it constantly. Work is broken, he would say. People spend more time at work than anywhere else. But offices are grey. Offices are soul-crushing. WeWork would fix that. WeWork would build community. WeWork would elevate consciousness. It sounded idealistic. Investors were skeptical. Most saw a real estate company, a subletting operation with nice furniture. Neumann rejected that framing completely. This is not real estate, he insisted. This is a technology company. This is a movement. Early fundraising was difficult. He knocked on door after door. Most venture capitalists said no. Real estate was not exciting. Co-working was a niche idea. One investor recalled Neumann showing up with holes in his shoes. But his energy was magnetic. His conviction was absolute. In 2011, WeWork raised its first round. Joel Schreiber invested $5 million. He received a third of the company. It valued WeWork at $15 million. A modest start. nobody could have predicted what came next. Neumann kept opening locations. Soho filled up. A second space followed. Then a third. Each one was packed. Waiting lists grew. The formula worked. Young professionals loved the vibe. The exposed brick. The craft coffee. The sense of belonging. By 2012, WeWork had 4 locations. Revenue was growing. The team was small but devoted. McKelvey designed the spaces. Neumann sold the vision. They complemented each other perfectly. One built the product. The other built the dream. The dream was just getting started. In 2014, WeWork was everywhere. New York, San Francisco, London. The offices were beautiful. The beer was free. The music was loud. And Adam Neumann was just warming up. He had a gift. He could walk into any room and own it. Investors didn't just listen. They believed. They believed in the vision of a company that would change how the world worked. Not just office space. A movement. A revolution. A new way of living. The money came fast. In 2014, WeWork raised $355 million from investors led by DAG Ventures. The valuation hit $5 billion. A year later, another round. $434 million. Fidelity Investments jumped in. The valuation climbed to $10 billion. WeWork was now the fastest growing startup in New York City history. But Adam wanted more. He always wanted more. He opened locations in 12 countries. He signed long-term leases on buildings he hadn't filled yet. He hired thousands of employees. The burn rate was staggering. Hundreds of millions of dollars vanished every quarter. It didn't matter. The vision was bigger than the numbers. Then came SoftBank. In 2017, Masayoshi Son visited WeWork's headquarters. The meeting was supposed to last an hour. It lasted 12 minutes. Son looked around. He saw the energy. He saw the chaos. He wrote a check. For $0.4 billion. It was one of the largest private investments in history. Son told Neumann to think bigger. Spend more. Move faster. Adam didn't need to be told twice. With SoftBank's money, WeWork went on a buying spree. They acquired Meetup, a social networking platform. They acquired Conductor, a marketing software company. They launched WeLive, a co-living concept. They launched WeGrow, a private school. Adam talked about WeBank, WeSleep, WeEat. The prefix We was attached to everything. The company wasn't a real estate business anymore. It was a lifestyle brand. It was a tech company. At least, that's what they told investors. The parties were legendary. WeWork threw a summer camp every year. Thousands of employees gathered in the woods. There were concerts. Run the Jewels performed. Lord performed. There were open bars and bonfires. It felt like a festival, not a corporate retreat. The message was clear. This was not a normal company. Inside headquarters, the culture was electric and exhausting. Employees worked 18-hour days. They drank tequila at their desks. Neumann surfed between meetings. He walked barefoot through the office. He smoked marijuana on private jets. His wife, Rebecca, co-founded WeGrow. She told teachers she could see their auras. The line between genius and delusion was getting thinner. By 2019, WeWork claimed a valuation of $47 billion. It was the most valuable startup in America. Only Uber was close. The company occupied more office space in Manhattan than any other tenant. More than JP Morgan. More than Goldman Sachs. Adam Neumann was on the cover of magazines. Forbes. Bloomberg. Fortune. He was the future of work itself. But the cracks were forming. WeWork lost $1.9 billion in 2018. Revenue was growing, yes, but losses were growing faster. For every dollar earned, $2 went out the door. The business model was simple and dangerous. Sign 15-year leases. Rent desks on month-to-month terms. Hope the desks stayed full. Hope the economy stayed strong. Hope nothing went wrong. Journalists started asking questions. How could a company that rented desks be worth more than Ford? More than General Motors? How could a landlord call itself a tech company? The Wall Street Journal dug deeper. They found that Neumann had bought buildings personally. Then he leased them back to WeWork. He was his own landlord. He charged his own company millions. He also trademarked the word we. Then he sold the trademark back to WeWork for $5.9 million. He sold it to himself. The board approved the deal. Nobody blinked. The money kept flowing and the questions kept growing. But Adam kept smiling. He had the world convinced. The dream was still alive. At least for now. The IPO was coming. It would change everything. Just not the way anyone expected. In August 2019, WeWork filed its S-1. The document was 359 pages long. It was supposed to inspire confidence. Instead, it ignited a firestorm. The prospectus opened with a strange declaration. We dedicate this to the energy of we. Capital W, lowercase e. It read like poetry, not a financial filing. Wall Street analysts were immediately skeptical. This was not how serious companies went public. The numbers told a troubling story. WeWork reported $1.8 billion in revenue for 2018. But it also reported $1.9 billion in losses. It was spending more than it earned. Every single dollar of revenue cost more than $1 to generate. The company had burned through $2.9 billion in cash that year alone. And the losses were accelerating. In the first 6 months of 2019, WeWork lost another $904 million. The trajectory pointed in only one direction. Down. But the financial concerns went deeper. WeWork used a custom metric called community-adjusted EBITDA. It stripped out nearly every major expense. Marketing costs were removed. Design and development costs were removed. Even basic building expenses were excluded. Critics called it meaningless. Professor Scott Galloway called it the most ridiculous metric I have ever seen. The metric made losses look like profits. It was financial alchemy. The S1 also revealed Adam Neumann's extraordinary control. He held shares with 20 votes each. Ordinary investors got 1 vote per share. He could never be outvoted. He could never be removed. The board had almost no power to challenge him. Then came the related party transactions. Neumann owned buildings personally. He leased them back to WeWork. He was both landlord and tenant. The company paid him rent from investor money. He had collected at least $12 million this way. He also trademarked the word we. Then he charged WeWork $5.9 million to use its own name. The payment was later reversed, but the damage was done. Media coverage shifted overnight. Journalists who once praised Neumann now investigated him. The Wall Street Journal published a devastating series. Reporters found stories of tequila on private jets. They uncovered erratic management decisions. They documented a culture of excess and chaos. One report described Neumann's $60 million Gulfstream G650. Another revealed his extensive real estate holdings. He owned properties worth hundreds of millions. Some were funded with loans backed by WeWork stock. His personal wealth was tangled with the company's future. The public narrative collapsed. WeWork was no longer a visionary tech company. It was a real estate firm with extraordinary losses. The community language in the S1 now seemed absurd. Conference rooms and shared desks were not a revolution. They were just office space. Institutional investors began backing away. JP Morgan and Goldman Sachs had initially valued WeWork at $47 billion. That number now seemed detached from reality. Analysts recalculated. Some estimated the true value at $15 billion. Others said $10 billion. A few went lower. The Securities and Exchange Commission had questions too. Regulators examined the unusual accounting metrics. They scrutinized the governance structure. The level of insider transactions raised red flags. WeWork was forced to amend its filing multiple times. Each revision made things worse. The company reduced Neumann's voting power. It reversed the trademark payment. It tried to clean up the governance issues. But the fixes only confirmed the original problems. Every correction was an admission. SoftBank watched the disaster unfold. Masayoshi Son had invested over $10 billion. His vision fund had staked its reputation on WeWork. Now that bet looked catastrophic. Internal pressure mounted at SoftBank. Limited partners demanded answers. By September 2019, the IPO was in free fall. The target valuation dropped from $47 billion to $20 billion. Then to $15 billion. Then lower still. Banks could not find enough buyer interest. Roadshow meetings were described as brutal. Investors asked hard questions. The answers were not reassuring. On September 16, 2019, WeWork postponed the IPO indefinitely. 6 weeks after filing the S-1, the dream was dead. The document meant to launch a historic offering had instead exposed a historic fraud of ambition. Adam Neumann stepped down as CEO on September 24. The board he once controlled had finally turned against him. The most anticipated IPO of 2019 never happened. A company once valued at $47 billion was now fighting to survive. The S-1 was supposed to be a beginning. It became an ending. The world watched in shock as the S-1 filing went public. Investors saw a company drowning in massive red ink. Adam Neumann had promised a world of communal consciousness. Instead, the documents revealed a mess of personal conflicts. He trademarked the word "we" and sold it back. He leased his own buildings to the company for profit. The public markets reacted with immediate and harsh judgment. WeWork entered August 2019 with a $47 billion valuation. By September, that number crashed toward $15 billion. The planned initial public offering was suddenly in grave danger. SoftBank and Masayoshi Son grew increasingly nervous and frustrated. They had pumped billions into a dream that looked hollow. Pressure mounted within the board to remove the charismatic founder. Adam Neumann was forced to step down in late September. He walked away with a massive $1 billion exit. Employees who held worthless stock options watched him fly away. Artie Minson and Sebastian Gunningham took over as co-CEOs. They faced a company burning through cash at lightning speed. The IPO was officially withdrawn on the last day of September. Thousands of staff members prepared for the inevitable pink slips. The fall from grace was swift, brutal, and very public. SoftBank launched a $5 billion rescue package in October. This deal gave the Japanese giant 80% ownership. The visionary founder was gone, but the debt remained massive. WeWork became a cautionary tale for the entire tech industry. They had too many expensive leases and too few members. Sandeep Mathrani became the new CEO in early February 2020. He was a veteran of the traditional real estate world. He tried to cut costs and close underperforming office locations. Then the global pandemic hit and emptied office buildings everywhere. Remote work became the new standard for companies around the world. WeWork struggled to justify its existence in a Zoom world. The company finally went public through a SPAC in 2021. Its valuation had shrunk to a mere $9 billion. This was a fraction of its former peak glory days. The stock price began a slow and painful downward slide. It traded under the ticker WE on the New York Stock Exchange. Retail investors hoped for a turnaround that never truly came. Losses continued to mount every single quarter without fail. By early 2023, the financial situation turned truly dire. WeWork warned investors about its ability to stay in business. David Tolley took the helm as the next CEO. He faced a mountain of debt and expensive long-term leases. The stock price dropped below $1 per share. The New York Stock Exchange issued several warnings about delisting. Reverse stock splits failed to stop the bleeding for long. On November 6, 2023, the company filed for bankruptcy protection. This Chapter 11 filing occurred in a New Jersey court. The company reported nearly $19 billion in total liabilities. They needed to tear up hundreds of office lease contracts. Landlords across the globe braced for a wave of defaults. The once mighty unicorn was now a ward of the court. Management began a desperate process of restructuring the entire firm. They sold off non-core assets to raise immediate working capital. They exited entire markets like Hong Kong and parts of Europe. The bankruptcy process revealed the true scale of the waste. Millions were spent on private jets and lavish corporate parties. The dream of elevating the world's consciousness was officially dead. It was replaced by spreadsheets and bitter legal negotiations. Creditors fought over the remaining scraps of the business. SoftBank eventually saw its multi-billion-dollar investment turn to zero. Adam Neumann tried to buy the company back in 2024. His $600 million bid was firmly rejected. The board preferred a path led by existing senior lenders. WeWork emerged from bankruptcy in June 2024 as a private firm. It was much smaller and focused on actual profit margins. The high-growth era of the We generation was over. The company had burned through $11 billion of equity. It left behind a trail of broken promises and empty offices. The glass walls of the co-working spaces remained standing. However, the magic and the hype had long since vanished. The failure of WeWork changed how Silicon Valley viewed growth. Profit mattered more than a charismatic founder's wild vision. The transition from unicorn to bankrupt shell was finally complete. A new and sober era for the office market began. The story of the Great Collapse reached its final page. Reality had finally caught up with the expensive office dreams. The dust settled on the empty glass offices. A giant had fallen with a loud crash. WeWork lost $47 billion in total market value. Adam Neumann left with a massive golden parachute instead. This failure offers 3 vital lessons for every founder. First, never confuse a hype cycle with real profit. Growth at all costs is a very dangerous drug. WeWork burned through billions of dollars of SoftBank cash. They chased rapid expansion instead of a solid margin. A tech multiple does not fit a real estate firm. This valuation gap eventually destroyed the entire house of cards. Founders must focus on unit economics from day one. High revenue is meaningless if the losses grow faster. Masayoshi Son admitted his own ego blinded his judgment. He pushed Adam to think even bigger and faster. This pressure forced the company into very risky lease agreements. These long-term debts became a heavy noose around their necks. Second, the cult of personality is a corporate poison. Adam Neumann ruled the company like a private kingdom. He held 20 votes for every single share owned. This total control silenced the voices of reason and logic. He used company money to fund his private jet flights. He bought surfing companies that had no logical synergy. No single leader should be bigger than the mission itself. Boards must provide strict oversight and honest feedback to CEOs. Transparency is the only cure for executive greed and vanity. The S1 filing in August 2019 exposed the ugly truth. Investors saw the self-dealing and the massive yearly losses. The public market does not care about your personal brand. It cares about sustainable growth and honest financial reporting methods. Authentic leadership requires humility and a sense of duty. Without accountability, a visionary becomes a very expensive liability. Third, culture must be built on trust and stability. WeWork promoted a party atmosphere to hide deep systemic flaws. They gave out free beer while the floors remained empty. Employees worked long hours for shares that became totally worthless. A mission statement cannot replace a viable business model. Purpose is important, but it does not pay the rent. Founders should treat their staff like partners, not fans. The flashy slogans on the walls were just empty words. Real culture comes from shared success and mutual respect. The collapse left thousands of people without any stable jobs. It ruined the reputation of the co-working industry for years. Success is measured by longevity and not just headlines. We look back at the rubble of this empire. The dream of a global community became a nightmare. WeWork is now a classic study in corporate hubris. It serves as a grim warning for future tech unicorns. High valuations are temporary, but debt is very permanent. Do not build your house on the shifting sands. Build it on the rock of a real business. The lights are dimming in the shared glass cubicles. The party is over and the bill has arrived. Every entrepreneur should study these scars very carefully indeed. Avoid the ego and focus on the math instead. The next big thing is already waiting for us. It must be built with more wisdom and care. Only then can we avoid another billion-dollar tragedy. The history of business is written in these hard lessons. We must listen to the silence of the empty rooms. The era of the reckless unicorn is finally ending now. We move forward with our eyes wide open today. Wisdom is the only true profit from this disaster. So what is the final lesson of WeWork? It is not simply that one man failed. It is not that ambition is dangerous. The lesson is deeper than that. WeWork exposed a system. A system built on hype. A system fueled by cheap capital. A system where storytelling replaced accounting. Where vision replaced verification. Adam Neumann raised over $10 billion. He did it with charisma. He did it with energy. He did it with 3 words. Elevate the world. Investors believed him. Employees believed him. An entire industry believed him. SoftBank wrote check after check. The valuation climbed to $47 billion. Nobody stopped to ask a simple question. Where is the profit? By January 2019, WeWork filed its S1. The document revealed the truth. Losses of $1.9 billion in a single year. Revenue was growing, but costs were growing faster. The math never worked. It was never going to work. Not at that burn rate. Not with that structure. The IPO collapsed within 6 weeks. The valuation fell from $47 billion to $8 billion. Then even lower. Neumann walked away with a $1.7 billion exit package. Thousands of employees lost their jobs. Many lost stock options worth nothing. The contrast was staggering. One man profited from failure. Thousands paid the price. That is not just a business story. That is a moral story. WeWork filed for bankruptcy on November 6, 2023. The company that once promised to change the world could not pay its rent. Think about that. A real estate company that could not afford real estate. The irony is almost too perfect. But WeWork did change something. It changed how Silicon Valley sees itself. Before WeWork, the playbook was simple. Grow fast. Lose money. Tell a story. Raise more money. After WeWork, investors started asking harder questions. Due diligence came back into fashion. Unit economics mattered again. Governance mattered again. The age of blank checks was ending. Masayoshi Son lost over $11 billion on this single bet. He later called it foolish. That word carried weight. The man who built SoftBank admitted his mistake publicly. It was rare. It was honest. And it was too late. WeWork still exists today in a smaller form. It exited bankruptcy in 2024. The offices are still there. People still work in them. but the dream is gone. The revolution is over. What remains is a cautionary tale written in glass walls and free coffee. This story matters because it is not unique. The pattern repeats. A founder with vision. Investors with fear of missing out. A board too weak to say no. A culture that confuses growth with success. We saw it before WeWork. We will see it again. The question is whether we learn. Whether the next time a founder promises to change the world, someone in the room asks how. Asks at what cost. Asks who pays when it fails. Because someone always pays. That is the story of WeWork. A company born from ambition. Inflated by capital. Destroyed by hubris. And remembered as a warning. Thank you for watching this episode. Next time, we turn to another spectacular rise and fall. A company that promised to revolutionize healthcare with a single drop of blood. Elizabeth Holmes built Theranos into a $9 billion empire. She was on the cover of Fortune. She was called the next Steve Jobs. But the technology never worked. The blood tests were fake. The patients were real. And the consequences were devastating. That story is next. The Theranos deception. Do not miss it.